We'll move to question number 4. Here, fire has been occurred on 20th 7 2012. Okay, and 20th 7 2012. Here, opening stock of the year 2011, closing stock, everything is given. So you have to prepare normal trading account of 2011 to find out the gross profit as per the first question, So now stock on 2011 is given, means opening stock of 2011, that is 45,000. When the information is given for the previous year, and when there is no profit, is gross profit of the past years are not given, then you have to prepare the trading account to find out the gross profit of the last year. So opening stock on 1/1/2011 is 45,000, and stock on 31/12/2011 means that is the 31/12/2011 means the closing stock. So here closing stock is given, is not in a balancing figure because it's in balancing figure, it will be in memorandum trading account. Okay, so it's by closing stock is here 80,000, which is given in the question. And next point is purchases during the year 2011 is given, means to purchases that is 5,36,250. Okay, and here stock on sales during the year is given, that is 6,75,000 is the sales of this year. So there is no purchase return, no sales return, no any other direct expenses has been given. So you can, but remember one thing, purchases during the year 2012 and sales during the year 2012, every information is given in the question. Afterwards, there was a practice in the business to value stock at cost less 10%. Okay, cost less 10%, and that is opening stock at cost less 10%, but closing stock at cost plus 10%. The amount of policy was 60,000 rupees. Ascertain the value of stock destroyed by fire. Give the statement of claim under average clause. This is also an extra thing that they have given, that you have to show the amount in the statement of claim, that it should be in average clause. And thing is here, that in their company there is a practice that they are going to mention the opening stock in cost less 10%. So here remember, opening stock is cost less 10%, means it's not 45,000, you should calculate it, and closing stock is also not 88,000, you have to calculate it. So, so here you have to show the note for this. Here opening stock is valued at cost less 10%. It's given in the question that they are going to value the opening stock in cost less 10%. So think if cost is 100. Okay, imagine if cost is 100 rupees and value reduces by 10%. Value decrease by 10%, reduces by 10%. So andre eshtayitu? So for 10% means, for 100 rupees 10% means 10 rupees means 90 rupees. So for 90 cost eshtagutte? Cost will be 100. So see here, cost is, they are going to they are having the practice that 10% less agi mention ಮಾಡಿರ್ತಾರೆ. So what happens here? If cost is 100, the value is reduced by 10% of 100 rupees, that is 90. So for 90 rupees ಗೆ ಕಾಸ್ಟ್ ಅವರು ಎಷ್ಟು ಅಂತ ಇಟ್ಟಿರ್ತಾರೆ, 100 rupees ಅಂತ ಮೆನ್ಷನ್ ಮಾಡಿರ್ತಾರೆ. But now it's given that how much, then for actually they have given in the question that stock on 1/1/2011 is 45,000. So for 45,000 ಏನಾಗುತ್ತೆ ಇದು, you should take it as 45,000 into 100 divided by 90. So that's equal to 45,000 into 100 divided by 90. That's equal to, you will get 50,000. So opening stock is 50,000. ಅವ್ರು ಏನು ಮಾಡ್ತಿದ್ದಾರೆ, 10% ಲೆಸ್ ಅಂತ ಕನ್ಸಿಡರ್ ಮಾಡ್ತಿದ್ದಾರೆ. ಡೈರೆಕ್ಟ್ಲಿ ಯು ಕ್ಯಾನ್ ಟೇಕ್ ಇಟ್ ಟು ದಟ್, if you want note then you can show it in a note, and I will put one star mark here, note number 1, and that is the value of the stock is given as 45,000. Directly you can take it as, and they are told that there is some practice of mentioning it in cost less 10%. So directly you can do that, 45,000 into 100 divided by 90, you will get 50,000. And next thing is for closing stock. Closing stock also they are doing the same practice, but the only change is cost plus 10%. Here cost less 10% is there, but for closing stock they are having the practice that cost plus 10%. Means in question they have given that closing stock is 88,000. Okay, so directly I will show you, cost plus anta kotre 88,000 into 100 ಇಂದ ನೀವು ತಗೊಂಡ್ರೆ ಏನಾಗುತ್ತೆ, ಅದು 110 ಆಗುತ್ತೆ ಅಷ್ಟೇ. ಸೊ ಕಾಸ್ಟ್ ಲೆಸ್ 10% ಅಂತ ಕೊಟ್ಟರೆ 100 divided by 90 ಆಗ್ತಿತ್ತು. ಕಾಸ್ಟ್ ಪ್ಲಸ್ ಕೊಟ್ಟಿರೋದ್ರಿಂದ 100 divided by 110, you will get 80,000. So now make the total of it. Total is 7,55,000. Both the sides 7,55,000 rupees. And here in trading account, balancing figure will be gross profit, and gross profit is 1,68,750. This is your gross profit. And for this, to prepare memorandum trading account, you must know the rate of gross profit on sales. So formula is gross profit divided by sales into 100. Okay, so to find out the rate of gross profit, you have to do gross profit divided by sales into 100. So you will get the rate of gross profit, that's 1,68,750 divided by that time sales is 6,75,000 into 100. That's equal to 25% is the rate of gross profit on sales. Next thing is you have to prepare the memorandum trading account to find out the closing stock at the time of file. Here 2 opening stock, 2 purchases by sales by closing stock, and 2 gross profit. Okay, now it's given in the question that opening stock means last year's closing stock, that is 80,000. Directly you can write it here. And this year purchases is given in the purchases during the year 2012 up to the date of fire is given, that is 3 lakh. And I think sales is also given, that's during the year 2012 up to the date of fire, sales is 3,60,000. Okay. Now, to find out the closing stock means to find out the balancing figure will be the closing stock. You must know the gross profit. So, how do you calculate gross profit on sales? By taking last year's profit as a base. So, average gross, average, gross profit rate is 25% on sales. Just you have calculated by using this formula. So, gross profit on sales. Sales is 3,60,000 into 25%. So, the amount will be 90,000. 90,000 rupees is sales. So, gross profit on sales. So, make it 4,70,000 is the total. 4,70,000. And the balancing figure is your closing stock at the date of fire. That is 1,10,000 rupees is the closing stock on the date of fire. So, same amount you should write it here, 1,10,000 rupees in the statement showing amount of fire claim, 1,10,000, and at that time salvaged stock is 33,000. 33,000 rupees goods has been sold. So, actual value of the stock at the time of fire is 77,000 rupees. Now they have specifically mentioned that you should show it into the average clause. So, average claim amount under average clause. That is this formula you have to use. Policy amount. The amount of the policy you have taken as a fire insurance, and value of stock on hand at the date of fire into actual value of the stock. Eshittu and actual value eshtayitu anta. So, policy amount is given in the problem that the amount of policy was for 60,000 rupees. So, they have taken the policy for 60,000 rupees. Value of stock in hand is 1,10,000 at that time. ಅದರಲ್ಲಿ ಉಳಿದಿದ್ದೆಷ್ಟು ಸ್ಯಾಲ್ವೇಜ್ ಸ್ಟಾಕನ್ನು ಲೆಸ್ ಮಾಡಿ ರಿಮೈನಿಂಗ್ ಈಸ್ 77,000. So you will get 42,000 rupees as a claim amount. So this amount will be claimed by insurance company.